Good evening, friends. Today, while we shall be discussing about the projection of prices in Bitcoin, we specifically do analysis on daily time frame because we usually try to be an investor in Bitcoin and not a speculator. This is a personal view and not a recommended say. First, let me clear out this point very clearly. And the important of today's chart here is we can clearly apply basic geometry that the price has been moving within the same channel. As you can see, this one, it's locked in between this channel like a capsule trade. We coin it as a capsule trade. Okay, and the most important factor is, don't you feel that Bitcoin is stuck in a zone wherein it's not able to go below 17,500 and above 25? So analyzing this until the Bitcoin is continuously making higher highs. You can see I'm drawing it out for you all. These are the higher lows, and you can continuously see I have circled them. It's on a perpendicular run on higher highs. Now, when we join a trend line just on this candlestick pattern, we can clearly see that Bitcoin is struggling somewhere in and around two factors. It's trying to break this 25,000 level from a very long time now. You can see it's been trying to struggle since 20th of June, July. And when a particular level is been hit again and again, so that means there are buyers trapped into it, higher probability. So they are trying to knock the prices off. So now here, what we can do is we can make a buy above 25,300 pricing, because we know that until the next heavy seller zone doesn't get activated, which is at 26, a good profit margins can be captured. This is for the buy side analysis. Now, assuming the Bitcoin pours down to this level, who knows, because there is no fundamental analysis done on it. The only way you can correlate Bitcoin is it runs against dollar index. Dollar index is running stronger, Bitcoin is falling down. But many times you can see dollar index is falling and Bitcoin is also falling, because the thing is, Bitcoin doesn't have any fundamental back attached to it. So let's assume that Bitcoin breaks below 22K. The first thing it can achieve a low of is 19,500 approx. And final goal would be 17,500, because you can see clearly it has a long story to go downwards from here. It has a long story downwards. So let's use very basic and simple structures to predict pricing and try to make productive trades, not by extensively trading throughout the day, but by taking positional trades. Now assume I did discuss about taking the trades in buy zone. Now where are the losses going to be, or the what you say is stop losses? Okay, as we have made out this zone, okay, we have clearly pointed out this zone. So always remember, friends, your stop loss should be always for buying below the latest swing, and for selling it should be above the latest buy swing. Why I'm telling you this is, many times people say that our stop losses get continuously hit whenever we put a stop loss. Let's say you are trading in these zigzag zones. Okay, the whole world is knowing that this is the top prime resistance. Okay, and this is the support. So if you place in your stop losses exactly near the supports, let's say you are a seller, so what's going to happen? It's going to touch it and go back again. Or let's say you are a buyer, you are placing your stop losses here, so it's going to touch and come back again. That's why I was telling you, use the latest swing points to place your SLs. And always remember, it is not mandatory you find a tradable position. Let's say you find, as I have always recommended, take line chart to draw trend lines. Okay, because line chart is built on close basis, pricing basis. Okay, so that is the best pricing which it is going to give you. Okay, so let's say you found that this is a trend line here. Okay, now somebody say will think that latest swing is this, a larger trend. You will try to search for a trading pattern above this breakout and keep your stop loss here. That is fine. This is a good idea to do so. But let's say you are trying to do a selling at this level. Okay, and let's say the latest buyer swing, assume that this trend is coming down directly. So where is the last buying zone? The last buying zone is here. So you keeping your stop loss here 23, or at least let's say it's 22,600. You are entering after the trend line breakout at 19,000 for an initial take profit level of, let's say, 18,000. So for $1,000 profit, you are risking all the way $3,000. This is not a good risk to reward ratio. Try to focus on trading less but trading meaningful. And you just finding a trade is not important. You finding a trade which supports your risk to reward ratio is the most important. Okay, so please focus on this, guys. Thank you.